Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. And if you have any questions, check out finding-value.com, where I dive deeper into all this stuff, looking for potential investment opportunities. And I do share those during the midweek updates and during the question and answer sessions on the weekend. And you can see my portfolio on the website for this commodity bull market, which includes energy services, precious metals, and all that stuff. So let's dive in there. Let's take a look and see what's going on. This is the DXY, the dollar. We are continuing to head lower, down 0.16%, but it doesn't look horrible in terms of just heading straight down. We do have a trend line break that I can see here. Well, we'll put a couple of trend lines here. We put one here where that hasn't broken, but I can kind of squeeze this down here too, where this could potentially be a trend line break as well. I also see more buying pressure here with the bullish engulfing there, and then the smaller pullback inside of it. That could be, and then this isn't kind of early to claim this, but that could be a move higher in the short term, or at least sideways at the worst. But we'll have to monitor that and see if that occurs the way that I drew it. We're still seeing yields coming back a little bit, but they are squeezing the opening and closing price, which is a small bodied candlestick. So we've come all the way back, and sometimes they do double bottoms, which we could be doing, and maybe we find support there. We'll have to see with trading sessions ahead of us if we break through that with a big red candlestick, or if we get some support here and base out a little bit. And that's kind of going across the board here. We are getting to support levels that we bounced at before, and we'll have to see if those support levels hold and if we do a potential double bottom or if we rip through that. We do see the opening and closing prices of the candlesticks starting to come together, which means the buying and selling pressure could come right by that support level. And then the buyers start to equal the sellers. You see that in your candlesticks that look like this, these small opening and closing prices. 30-year doing the same thing, but it's getting lit. This still has pretty good momentum here. So we could sell off further to the downside. That's still on the plate of this, and we could come back to levels way down here. The path is kind of tough to determine, but it still looks like we've got momentum to the downside where that is going to eventually end its way up down in that location. TYX TNX ratio, we were flat today, down 0.1%, but we've broken the downtrend line, and yeah, we could do a retest, but I think we're going to go higher here. What that means is that the 30-year is generally more stable, so the 10-year is going to fall at a faster pace than the 30-year, which will bring this ratio up. The reason I have it done this way is because of its ability to overlay with other charts. So when this goes up, generally gold goes up with it. So precious metals, when this goes up with it. Bond prices heading a little bit higher today, up 0.54%, aka weaker yields. And we'll see if this continues. It does look like we are coming through and trying to break out of this consolidation here with higher lows coming up into it. You can also draw it like that if you'd like. But again, that looks like that is good to continue higher and yields to continue lower. What that generally means is that people are seeking safety, or maybe they're already doing QE and lowering rates. Tough to say who's buying these bonds, but that is occurring. The U.S. 2-year, 10-year is up a little bit, and we're at that 1%, the 1-to-1 ratio where the 2-year and the 10-year equal each other. Generally speaking, when this dives below, that is when we see a recession or slowdown in history. And that does look like that could easily continue like that. Gold up $19. It looks good. I do think that this can continue higher. And that deals with the TYX TNX ratio and interest rates falling. That's what's determining my position here. It's the charts of the drivers of gold. I think that will continue to go up. I think silver is going to rip at some point here. We are up today 1.87, not a totally strong candlestick. And there very well could be more gyrations in the short term. But longer term, medium term, I think we're going way up. We're talking like way up. Yeah, this is a perfect location here to be looking for a potential move higher. And it's a broken cup and handle pattern of a big old pattern here, and we've broken to the upside. This looks fantastic for a huge move up. For silver, platinum up 2.35% today, pretty big move. It's still very low, and we have not broken this downtrend out of here yet. So we're just waiting for that to occur. It does have that pattern that you see before these breaks and a squeeze up between two resistance support levels. Palladium also straight above support. We got support going across up of 45 and then going across here. It still looks good and it's holding on. We've got GDX up 1.14, GDXJ up a little bit, and SILJ up. The chart's not exactly that powerful in the short term, but overall, if you look from the longer term, they look very good to move higher. So in the very short term, over the next few days, it could move around a little bit more. So what? We're underneath resistance here for GDXJ. I'm willing to bet that this will break it over the next month, and we're going to be off to the promised land. SILJ is a little bit further below that of GDX and GDXJ. GDX has already broken out. GDXJ hasn't yet, and SILJ is still a good distance below its resistance trend line. I do think that these, to give you a big picture view, and again, I am biased because I think we're going to go way up, but I think that this is going to be a launching pad where we do something like that. So that's kind of what I think will occur in the future, next 6 to 18 months. XAU to gold ratio, we are still at ludicrously cheap pricing. We are way down there. This is what's going to give you that big drive in the mining companies. So if gold and silver do take off and crude oil stays relatively low, that's your margins expanding. So that's going to go way up. You can also price that in a ratio of gold divided by the United States Consumer Price Index, which is also, we'll put on a logarithmic here. So this is your 1970s bull market to 1980, your peak. Then you've got this big cup and a handle and another handle, and that is breaking. So that's gold outperforming the Consumer Price Index, which is the margins of the company. So declining margins, declining margins, declining margins, and then expanding margins are the ones that you see here. This is expanding margins, the big bull market. And I think we could get expanding margins here. That was bonus there. Crude oil down just a teeny bit today. We are slowing our momentum down here. Could this be a false breakout? I don't know yet. It looks pretty strong from a weekly perspective that we could see further downside. And I would probably think that this will be a false breakout. The question is, how low do we go? Do we go all the way down to $50 down here? Do we go to 60? Do we just get like this? I don't know. No one's going to know that. But we'll watch it. We'll see. We can also throw, a lot of people like the fib retracement stuff. Oops, this extension. So I'm just going to go from the bottom here, and then you go up, and then your fib retracement. A lot of the times we're at 50% fib retracement on oil, which is a pretty good spot for a fib retracement. It is possible that we go to 0.618, which is down at 55. So 55 could be another potential area if we break below the 50% fib retracement of where we're at today. But it does look a little bit bearish in the short term. TTF gas pulling on back. That does look a little bit bearish. It could pull back further. Natural gas in America up 5%. That actually looks pretty good to move higher. It's a big bullish engulfing right at resistance coming across here, and we could break through that resistance here with the momentum that's generated today and the big bullish engulfing we have today. Our boy XOP, yeah, you know me, down 0.8%. It does look a little bit weak. We do have this upward facing flag pattern that could pull on back. which it is. The big question is, how far do we go down? And that depends on what oil does. Oil at the beginning of recessions and or the beginning of these uninversion the yield curves, they generally pull back. So you're going to see weakness in the beginning of these slowdowns. At some point it'll bottom and it will turn as we go into we'll call it a recovery phase of that. But we could see some further downside in the short term here. OIH also selling off. We could see that originally with this big selling pressure candlestick, the small move higher, and then another bearish engulfing. Those generally result lower. And then we could see those pull back a little bit more here in the short term. Newcastle coal futures pulling back a little bit. I think this is sideways or higher, and we're above support. That looks good. So give it some time. We may have to go through this slowdown first and a little bit of going sideways before we get that upward move. Sprott Physical Uranium Trust down 3.33%, and we are still at the low end of this in terms of support. Uranium futures pricing just moving sideways, and I think this is all driven by the big macro stuff. Sideways there. We've got URA down 2%, and that looks pretty normal. You get this upward move here, and then we get a move lower, and it's following energy too, the oil markets. Uranium, same thing, and URNJ, and we could see further downside, guys. That definitely looks like it wants to sell off, and it's gonna wipe all of the retail out of here. And at some point, we're gonna have an entry point where all of retail's been washed out of this, and everyone's gonna hate the sector again, and that's when the bull market will begin, and we'll probably see a very big move in uranium. But right now, it still looks pretty bearish, and I probably wouldn't jump in front of that train yet. Copper up 1.46%. We're right at above support. We'll see if that support holds and what the economy does. With the uninversion of the yield curve, that's generally indicating a slowdown, and that can impact copper in a negative way. I'd rather look at gold and silver. COPX down just a little bit, and it looks like the equities are not believing the copper price, and they're selling off a little bit still. We're still above key support, though. We've got iron ore up 1%, but this has had a pretty big pullback. The momentum's still to the downside. I would be patient here and wait for a base. Aluminum also down, and that looks like it could continue lower. A little bit of momentum there. Nickel also down 1%, and I wouldn't jump in front of this train yet. I would wait. This is an upward-facing pattern. We could easily sell off further. We've got Mu down 0.5%, but we are above this falling wedge. Looks a little bit better than the other groups, but with the sell-off across the board of commodities and even the overall market, you could still see this pull back with those pressures. Emerging markets heading sideways. It likes the weaker dollar, it likes the weaker yields, but it doesn't like the slowdown. So that's where this is remaining muted at this time. When they lower rates and all that goes through, and when we start to recover, I think emerging markets is going to go way up. We've got KRE moving down a little bit today, down 1% is what I see, and that could pull back a little bit more. We are still above support, good support all through here. We've got TAN down a little bit, 0.22%, just been tracking sideways, not much else to say there. Lithium's trying to put in a base. You'll probably see it move sideways, and this still could sell off. We'll have to wait and see. Same with REMX. It still could sell off. It's been moving sideways this past few weeks, but it could easily break out to the downside if you get overall market selling. We've got Baltic Dry Index down a teeny bit today, but still above support, still looking okay. We've got XHB down a little bit, 0.73%. Above support, and it still looks okay at this current time. It very well could come back with the rest of the market. We'll have to wait and see. Russell 2000 down 0.61% and right on support. There's the support level, and we're right on top of it. We'll see if it holds. We've got S&P 500 down a little bit today, 0.3%. It still looks a little bit top heavy to me, and we could sell off into a selling pressure move, like a big move. It's a big rising wedge. Whenever you get these big patterns like this, the big ones, these could easily come back quite a bit here. So we'll see what that does. NASDAQ up just a teeny bit today, but that still looks pretty bearish to the downside. That easily could roll to the downside here, very easily. We have all these bearish engulfing candlesticks all over the place, and they're big selling pressure with just two small little green guys there. This looks bad. Doesn't look too good. SMCI selling off, still down 2%, still looks like total crap. Nvidia up 1%, but again, the momentum's to the downside. We'll see if that can turn it around, but I wouldn't be trying to do that with an inverted yield curve. Big selling pressure candlesticks all through here. Still screams to me that this is going to go lower, and this is distribution. People are selling their shares. Bitcoin down 3.44%. If you go on logarithmic, it looks a little bit, I don't know, weaker than other ones, and you can just see kind of the movements that scribes out here, and they are compressing into smaller and smaller moves. So the compression as you go up is a sign of weakness in the stock or the commodity or whatever it is. It doesn't look horrible, but there is some tightening. So think of it as the size of these in percent moves. And then you can see these are tightening up a little bit. That means that the buying and selling pressure is getting weaker and weaker as you go up, and that could eventually roll over. I'm not saying that it will immediately, but it could. And then we've got Ethereum. That's also got the same thing. You can see these big, vast movements, and then you can see the movement is less. And then you can see the movement is less. That generally means that it's getting tired and that we could easily roll over for a move lower. So that's what I'm seeing in the charts at this moment. And that's what I've got for today. So give me a thumb up for the content, subscribe to the channel, subscribe to the website if you guys like. The May Day coupon code is still active. We do have a question and answer session coming up this weekend at 5 p.m. Mountain Time on Sunday. If you're interested, you can ask me whatever questions you like about the commodity bull market. I do go pretty in detail with some of the stuff chart-wise and some of the details of this big bull market that I think is coming, why I think it's coming, and then looking at some of the charts in history to show you guys kind of what I see in the markets. So that's what I've got. We'll catch you next time. This is Finding Value.